Hello, investors. This is Ted Zhang, Associate Portfolio Manager with Revere Asset Management. Today is Sunday, July 28th, 2 p.m., coming to you from Fort Lauderdale with this weekend's Revere Roundup weekend walkthrough. So Connor's out this weekend. He has family in town, so I'll be covering for him and taking this video myself. I hope you guys enjoy. So let's jump right into it. As always, the state of the market. Um, we have this is some of the most bifurcation, trifurcation, or whatever you want to call it, market that we've seen. Right now, we have some market leaders, the liquid leaders we have in a bearish downtrend with a red arrow. However, if you're smaller and can trade the less liquid names, there's starting to be a lot of powerful stocks in the small and mid cap areas of the market. And we've talked about this with interest rates coming down, or at least the anticipation of those interest rate sensitive names are doing quite well. So you can make an argument that market leaders can actually be neutral since we are having some liquid leaders in the regional banks, in the biotechs, in the home builders, in the financials that are still doing quite well. But the traditional leaders in the tech groups, the consumer discretionary, cybersecurity, they're doing quite poorly right now. Short term, we have the S&P and the Qs below their 21 EMA, so we have that a bearish downtrend. But small and mid cap are in a bullish uptrend as we are seeing rotation there. Medium term, S&P is right at its 50-day, and the Qs are well below, and then small and mids are above. And then the long-term 200-day moving average, all major indexes are still above their 200-day moving average. So jumping right into the charts. Let's go here. The S&P, starting off with S&P, like I talked about, we closed just above the 50-day moving average in the 10-week at the end of last week. However, if you look at these days, there's just a bunch of distribution days in here on the weekly. This week, we closed at the lows of the week on huge volume. That's a churning week, even though we finished up that week. And then we had this outside week reversal on massive volume, and then a follow through week. So there's definitely a lot of distribution plaguing the tape in the S&P right now. That makes sense because the Mag 7 stocks that made huge moves are starting to pull back, and they represent 25-30% of the index. On the other hand, though, the equal weighted index looks a lot better, and we had a new 52, actually an all-time high weekly close in the RSP on volume as well. So the S&P 493 are finally getting some love after just months and months and even years of neglect. Q's even weaker than the S&P, well below its 50-day, and coming back to this 450 level area. So far found support at the 20-week moving average, but as you can see, distribution has plagued the tape even the last 3, 4, 5 months. Equal weighted index, not getting as much love like the RSP. We had a failed breakout and back into the base, back to the 150 day. So tech is definitely unfavorable at this point. Conversely, mid caps look similar to RSP, new all-time high weekly close, extremely strong. TNA or small caps IWM, extremely strong, 3 weeks up, huge volume on all 3 weeks, catalyzed by that cooler than expected CPI. This is the area of focus, and this includes biotech regionals, which I'll talk about later in the sector review. Dow, extremely strong as well. And this just continues to show that even though the previous leaders are pulling back and being distributed, there are a lot of names catching the slack and moving higher. So focus on stage 2 uptrend stocks right now, the stocks and groups that are moving, and then avoid stocks heading into stage 3 and stage 4, and where the groups are seeing outflows in money. VIX came down as well after rejecting this 20 area. And here we can see FNGS, which is a proxy for the Mag 7. Same with my Big 8 composite, going back all the way to the 20-week. And then on the other hand, the RGA composite kind of looks like the IWM and the MDY is flagging after this explosive breakout. So there are areas working, and you just must focus in those areas. Yields, the short end of the curve continues to come down in anticipation of the Fed rate cuts. And then the long end of the curve is coming down a little bit as well, but less than the short end. So the yield curve is steepening, as I talked about on the podcast and previous videos, and that is favorable for the banks. And I'll talk about the banks in the sector review. Dollar continues to go sideways, and that's actually Goldilocks scenario. We don't want a strong dollar, obviously, but extremely weak dollar is also not good for the markets. Gold failed breakout back into the base. Silver breakdown of this key level here in the lows of this recent range. Copper continues to sink as well. Made a new all-time high here. Failed and just continues to leak away. Crude continues to chop sideways. Same with gasoline. Nothing much going on there. And then Bitcoin. This is where I'm really interested in. Let me get rid of these lines for you. Let's just look at price itself. Right now, at the 69,000 area, that's the previous 2021 all-time highs. As I've been talking about for many weeks now, we undercut and reclaimed this level, ripped up the right side. So we really need to start putting in some tight weeks sideways here. It's a bit compressed on the right side, and usually compressed right side is a lot more failure prone if we do try to break out. The precedent I'm looking at here, talked about it on the podcast, if you were able to catch that, is the NVIDIA base from when it's sub 500 pre-split. Same here, right here, undercut this low, ripped up back to the highs, and then had to consolidate for the next 2 months before breaking out. And so that's kind of what I'm looking at for Bitcoin here. Solana's even stronger, right at this 190 level. If we take out 190, I would expect all-time highs to come soon. But as always, anything can happen. So just make sure to manage your risk. And right now we have a really tight inside day. So let's see what happens tomorrow when we open up a new week. Heading on to some breadth. This is the Pradeep market monitor, as I talked about. July 11th. What is significant about that date? Let's quickly go back to the IWM. July 11th was the cooler than expected CPI, which I called the macro EP and these interest rate sensitive names. And although that's when the S&P and NASDAQ started pulling back, breadth actually entered the markets, and we had a 1,072 breadth thrust with 1,072 stocks up 4% plus that day, and that's extremely strong. And ever since, we've had all these columns in the green. And from his studies and from our studies, confirming his studies, when you have these columns in the green, number of stocks up 25% plus in a quarter, down 25% plus in a quarter, up 25% in a month, and down in a month, when all these are green, as well as these first two columns, that is an environment where breakouts and trading strength can work. Continuing on, net highs in all time frames. I'll just pause here for a second for people to view it. Looking deeper in the hood, under the hood, net highs continue to persist even though the S&P has pulled back. NASDAQ, same thing, pulled back below the 50-day, but we are seeing expansion of net highs. NASI continue their uptrends, even though after curling down for just a day or two. So nothing to worry about, and staying overbought here, which is actually a sign of strength. Here's something interesting I want to note. Before, as the indexes were getting pulled up by the Mag 7, we saw bearish divergence. But ever since that July day, we had breadth expansion, even though the price of the indexes pulled back. And now we're seeing this positive breadth divergence, which is exactly what we want to see. It just means that stocks are participating on balance under the hood. And this is the same for the NASDAQ as well. Breadth bearish divergence turn into breadth positive divergence. It is also nice to see that sentiment has come down a bit. We were in the greedy territory, and now we're almost in fear. And that makes sense because a lot of the market was driven by the tech stocks and semis, and those have pulled back quite hard. But there are many areas in the market to participate in, so definitely be on the watch out for that. AAII bulls pulled back a bit too, reversion to the mean. That's exactly what we want to see. Bears are actually above historical averages now. Bulls are above as well, but much less than that 53, almost 53% reading. The NAM exposure index also came down back to 77 from this 100 level. And usually every time we get above 100, that's a warning sign to stop making new buys and start preparing for some type of pullback or correction, which we just got. And finally, this July FOMC coming up next week, pretty much nothing burger. Everyone expects, sorry, my monitor cut out. Yeah, in this July FOMC, everyone expects pretty much no rate cuts. But in September, people are pricing in definitely one rate cut and actually 11% probability for a 50 basis point rate cut. So we'll see what happens. The reason why interest rate sensitive names are quote unquote flying is because of this anticipation. We went from 7 rate cuts coming to this year, 6 to 7, down to almost 0 to 1, and now we're back to about 2 to 3. So let's see if the market is right this time around, and if the data backs what the traders and the interest rate traders think. So now heading on to deep view. This is where usually Connor comes in, but I'll take his role for this weekend. I have 6 sectors for us to look at, and then 5 stocks that I'm watching. The first one, of course, IWM. There's extremely strong action, like I talked about, and it's starting to flag here. You could definitely start off with a smaller buy, but it is extended from the main base. Mid caps is next. This is actually definitely buyable through last Friday's highs. We're right at this huge base right here, so not extended at all. And with IWM, you can play TNA, which is 3x leverage. Mid caps, you can play MIDU, which are the instruments I'm using. And sorry, for some reason my monitor disconnected again. 1 second. And we're back. So the next sector up is regional banks. This is definitely the strongest area in the markets that I'm seeing. As you can see, we just gapped up on the 11th day and just completely powered up. Comparing that to IWM, we still haven't made a new high, just flagging sideways, but KRE is making higher highs. So with this, I am staring at DPST for an entry. Liquid, high ADR, definitely get a really nice move. You can see how beaten down regional banks got in this last year. So there's a lot more potential upside in this area. Its cousin, XLF, just the bigger banks, extremely strong action, new all-time highs in the index while the S&P pulled back. So just another area I'm watching. We actually bought FAS and GROW, which is the 3x ETF. So if you want some more leverage and you feel like being more of a cowboy, that's the area to play. And finally, biotech, watching this one over these 103.5-ish highs, and I'll be playing that with Lab U, which is 3x biotech. And then finally, Bitcoin. I talked about it earlier, definitely staring at this. And I'll play IBIT or perhaps BITX. And in individual stocks, I'm watching MST Coin, which is building a really nice base, but just needs to tighten up on this right side. It saw some volatility. Volatility came back in the markets around this 270 level. Just amazing earnings and sales in the last 3 quarters. And then MSTR is another one I'm watching over this 1,811 highs. And keep in mind that we do have a 10-for-1 stock split on August 8th, so it'll be a lot easier to trade the stock in terms of being at too high priced. And both MSTR and Coin have earnings this week, both on August 1st. In terms of earnings, MSTR, I wouldn't think it matters too much because essentially they're just a Bitcoin leveraged ETF at this point. But Coin earnings could definitely affect it, or it could turn into an earnings gapper, which I'll definitely be interested in. Other 2 stocks are in the medical sector, INSM. We gapped up here on great phase trial data and just continue to see that post-news catalyst drift. Nice 62% move. And we're heading into earnings August 1st as well. This is just such a powerful stock with pure alpha. We've made a 266% move and only pulled back 7.5%. Just think about that. Unfortunately, we do have earnings coming up, so maybe you can try this to get a cushion in earnings, but you likely have to wait until earnings pass by, as no one knows what will happen on these earnings, especially biotech companies. You don't want to wake up to a 50% gap down. And then LNTH, this huge move, and now flagging back into the 10 EMA, really tight and controlled action. Earnings actually earlier, July 31st before the open. So it's another one I'm watching in the healthcare space. And then finally, I have ONON, big IPO base forming, just typical IPO base, really nice earnings and revenues, 138% year over year on earnings, and then 28% year over year on revenues. We have an inside week here, albeit pretty volatile. So hopefully this can calm down, get tight with volume drifting, contracting, and then we can look for a pivot point. This is that pre-IPO high level right here. So definitely a key level to watch out for. Continuing on, I want to quickly talk about earnings. Big earnings week. Starting Monday before the open, we have McDonald's on semi. After the close, not too much. And then Tuesday before the open, we have SoFi, PayPal, Pfizer. After the close, we have AMD, Microsoft, Starbucks, ANET, Pinterest, First Solar, WGS2, but it's less liquid, and that's been a very strong name. Before the open, we have Boeing, Wingstop, MasterCard. After the close Wednesday, we have big ones: Meta, ARM, Qualcomm, Carvana, even Riot. Thursday before the open, Moderna, Crocs, Mobileye. And after the close, big one with Amazon, Apple, Intel, Coinbase, DraftKings, Roku, and Square. Even Mara as well, and Melly. Just huge earnings week across the board. And couple that with FOMC Wednesday as well. Consumer confidence too. That's a pretty important number as well. But the big one is FOMC interest rate decision and the Fed chair Powell press conference afterwards. And then later on the week, we have employment data with unemployment rate, non-farm payrolls, hourly wages. So definitely a big week coming up. A lot of potential for volatility. So make sure you're finding those tight entries, places where you can manage risk. Because at the end of the day, risk management is the #1 job of a trader, investor, and money manager. So that is it. I'll wrap it up for this weekend. I hope you guys enjoyed. As always, we would love to hear from you. My email is ted@revereasset.com. My Twitter is here, TedHZhang. You can also reach out to Dan and Don at revereasset.com or Connor at revereasset.com. Our phone is 855-REAL-WEALTH, and that is 855-732-5932. And we named our flagship portfolio GROTECTION. And that means we want to participate when the market's in an uptrend, or finding sectors and groups and stocks that are uptrends while the market is favorable, and then protect money when we head into corrections. And if you're interested in becoming a client of mine, please reach out to my email or my Twitter. And with that said, I'll wrap up this weekend's video. This is Ted Zhang with Revere Asset Management, telling it like it is. Thank you for listening. Have a great weekend, and we'll see you next weekend.